All right. Good morning, everybody. Japan did the 10-year last night, and we have our 10-year this morning, along with some Fed speakers. The small caps are down the most, more than 0.5%, and Europe is up the most at almost 0.5%. The data out of Japan really didn't move the needle that much, it seems. They're basically flat. The Dow is flat. S&P and the NASDAQ down slightly, uh, testing a put wall depending on who you use for levels. So we've got numerous Fed speaks, and that makes sense. They're all trying to show how independent thinkers they are, while at the same time reinforcing the Fed's narrative. I keep seeing a discrepancy between different camps on how many cuts we're going to get. One camp is firmly pounding the table that it's going to be one cut and that's it. And there's another camp that says there's going to be two. I don't know. Maybe there's a third, because I still keep asking the question, why would they cut? You know, they have put themselves in a perfect position to just wait until a cut is actually needed and to disregard any pressure trying to force them to cut, election year or not, just to combat that great evil, the inflation. And so maybe a number to keep an eye on would be inflation expectations. The 10-year, it's not shown here with a high impact, but it's going to be an important one. So you're really going to want to watch the clock today. You always want to watch the clock. There's so many economic events that happen on a day-to-day basis that don't show up in here. Hopefully, over the years of me going through these steps every day, the same thing, day after day, you'll notice how different websites will show different economic events. And so if you look at enough of them, you kind of get a feel for how many events we're going to have today. And that's still not all of the events that there are in a day. There's more than this. They're just not headliners. And most of the time, they don't move the needle. And so they just really don't get mentioned. But even big ones like QRA, it happens quarterly. You never see it on these. And yet we all know how big and how important QRA is. So if that big one isn't on here, what else isn't on here? Rather than trying to stress out and find every single possible economic event and which ones might or might not be impactful today, we do the steps that we do. We check multiple sites. But you can also just watch the clock. Look at when these things report. They're on the hour or they're on the half hour most of the time. There's a few that land on a quarterly time frame, but most of them are on a half hour or on a new hour. Simple enough. If the market you're trading is sitting at the lows of the day or sitting at a major support and resistance level and you're getting a new half hour or hourly candle, prepare for changes. It's as simple as that. If you scroll back last night and take a look at what was going on over in Japan, you'll see, I'm not going to pronounce this guy's name because I'll just butcher it, but the Bank of Japan governor was talking about their possibility of intervening yet again and talks more about whether or not they're going to continue to raise rates. To me, it seemed like he left that on the table. They're more than willing to raise rates even more. We're going to get oil inventories today as well. There's times where that really doesn't have too much of an impact. And then there's times where everybody pays particular attention to reserves, and keep your eye on this one as well. Unless it's a short week, it'll happen on Wednesdays. If it's a short week, it would happen on Thursdays every week. So it's not much of a surprise. There was a bit of a surprise on how resilient the dollar has been after FOMC last week. I think a lot of people expected the Dixie, the DXY dollar index, to kind of remain squishy and pull back, stay back. And that's really not what we're seeing. So that's kind of shaking a few analysts up. But we should be coming out of this hurry up and wait mode. I mentioned multiple sources for levels. The levels that we're looking at here, they're similar to what we would get from spot gamma, but these are Mentor Q levels. They just recently finally started offering levels on their futures. What they used to do is give you S&P levels like SPX, and then they would give you the chance to offset that, right? So they'd say, okay, well, here's the Q levels. You can move all of them up 20 points, or, X amount of percentage points if you want to do it in percent, and just overlay it on the ES. And they bragged about how awesome that was. And of course, the feedback was, that sucks. You suck. Forget it. We're not doing it, because that's not even remotely close. But they finally started coming out with the futures levels like spot gamma, and they're not syncing up perfectly, which I don't know. Maybe we should be surprised for that. Maybe not. They're not way off base, especially on the call side. That lines up well. Their put side, however, they have this this level that was almost yesterday's low, and spot gamma does not have that level there. Then there is the put support at 5,200. They have a 1-day minimum move, which I haven't quite lined that up yet with my ADR levels, but there's the 1-day minimum move and there's my ADR. So not too far off. Same thing on the upside, 1-day minimum move, and there's the ADR. And that's why we want to keep our eye on the crude report today. Absolutely. So if you haven't heard of Mentor Q and you want something different than spot gamma, you could check out Mentor Q. I don't get anything out of mentioning it, right? It's not like they're paying me to talk about them. Spot gamma pretty much just has the arena, right? There was no competition. If you wanted futures levels, you pretty much had to go to spot gamma. But now there's competition. This should breed innovation and improvement, right? If they're going to compete with each other, maybe spot gamma will up its game and come out with yet again even something more. So who knows? We'll see. Spot gamma has the levels for Thinkorswim, and Mentor Q does not. So, if you're using TradingView, all well and good. But if you're using Thinkorswim, MintOrQ doesn't have what you need. The volume's about what we would expect. We're not seeing any hedging this morning. There's no market maker move here. We did go all day without hitting that daily pivot. So that's 2 in a row of MDP. But I want to point out how narrow this channel is this morning. Now, it's not the most narrow channel we've ever seen. The narrower, the better. When this channel is narrow, it implies that the market could make a big move today. It makes that decision based on previous day's data. If you were to, say clean off my chart and only have that pivot indicator on there with the channels, you would notice that some of the biggest move days happened on days where that channel was very narrow. And that range days tend to happen when the channel is very wide. It's not guaranteed. This channel doesn't make price move. It's not a catalyst or anything like that. It just implies that we've been going sideways. And after a market has been compressed and goes sideways, builds up energy, which we can see using things like RSI Laguerre, that a market which is squeezing and compressing, when it finally makes a move, tends to make a pretty good size move. So it makes sense. It's easy to discount that sideways behavior when we look back over the last few days, and it seems like we've really made some moves, right? We went from the cog line at 51.11 last Friday. We were all the way down here, and now we're sitting up, above 52.11. Well, we were above 52.11. That doesn't feel very sideways, but there was an expansion and then a lot of contraction, another leg up, an expansion, and then another contraction. I mean, you get it. That's what markets do. That's why you don't try to eyeball things in the shop when you're trying to figure out where to cut the wood. It's why we use indicators. We don't have to guess or assume with our eyeballs that something is ranging or sideways or has momentum or has trend. We can just turn the tool on and measure it. Where we open up in relation to that pivot point also matters, whether we open above it or below it. How we got to this point, were we rising up and then opened above it? Were we falling down day after day and then opened above it or below it? All of that has to come into consideration. We have been rising up, as I pointed out a minute ago, and we didn't open up above it. We opened up at it. So now what I would expect to see is the opportunity to tag an S1 and rally into an R2, or the other way around, to rally into an R1 and then fall down into an S2. We need the data first before we make these kind of, before we can anticipate these kind of moves. Unfortunately, the data is in the afternoon. It's going to be at 1 o'clock today. It's very likely that we could go sideways all the way until 1 o'clock in this megaphone style pattern. What happens with that is that we test the lows and we expand just a little bit lower than the previous lows because liquidity resides on the other side of the pivot. Just like here, when we tested yesterday's RTH low, we went lower than the previous low. We got into liquidity. Now we're coming back in. If we go to the upside, we could break through our own Globex high, maybe this high 52.19, a little beyond that, get into liquidity, fall right back down again, and just continue to do this on each side, broadening out as we develop that megaphone. They still haven't moved that call wall. Even testing it yesterday. In fact, when we were getting tangled into it yesterday, one of the things that I went looking for was action showing that they were rolling out that call wall, and I couldn't find any. It makes sense that I couldn't find any because they didn't roll it. It's still there, but I didn't know that at the time. I looked around, I couldn't find any activity suggesting that the call wall was moving. It didn't get moved. But the put wall did. Rolling down that put wall is bearish. Not rolling up that call wall is bearish. It's a bearish bias and a bearish behavior. We're a little extended from the weekly pivot point, not drastically so, but there is a bit of a distance. That's something that has to be taken into consideration as well. The weekly pivot point is down here at 51.22.5, and we made it all the way up here, 52.25. So almost 100 points away. Not even almost. That's 100 points plus a little bit. Now we monitor distance from 10. Every day we look at it, discuss how far away from the 10 we are. I might go and build something that measures distance from the weekly pivot, because it's certainly something that I tend to pay attention to. And it would be nice to be able to quantify, especially for different markets, what the average turning point is and how far is too far, right? This is back to that eyeball level. Yeah, it looks pretty far. The thing is, it's not always how far away it is. It's how fast it got that far away. Now, there's an indicator for that. I think could be used for that. Something like inertia. But I don't know. It's just something to think about. I know I'm not the only one that codes around here. So maybe I'll inspire someone to give it a shot. Either way, we're in this hurry up and wait mode. We don't have any bias here on which direction it's supposed to go. No idea if it's going to turn out well or not, and how the market is going to respond to it if it doesn't. We've been still seeing how bad news is good, or at least how bad news makes the market go up, and how good news is kind of just shrugged off. It hasn't really sent us much to the downside. It just hasn't been embraced with excitement. So that leaves us in a bit of a pickle when trying to preemptively anticipate how the data is going to move the market, let alone what is the data going to be, good or bad. So I don't want to presume. I don't have to. You don't have to. We could just lay out the levels, wait for the data, and once it breaks the levels, then we've got to play. The spot gamma index is at a 1 point something. The closer to 4, the more likely it is it will stay range bound. And the closer to -4, the more likely it is that we can expand on the day and really make some moves. So far this week, we've had agreement between spot gamma and these pivot channels, which were telling us, yeah, we're probably just going to chop around, not make too big of a moves. We'll go more sideways than anything else. Now we're getting a little bit of a disagreement. This narrow channel implies that we could really make some moves today, while so far spot gamma index suggests that we could just chop around. if we're going to get reciprocation, the distance that we moved to the underside of VWAP would be the distance equal to the up move on VWAP, added to an S1 bounce with an R2 test, then it makes sense for this pullback. Just kind of clear out the noise here a little bit. If we think about where these ADR levels are at, we're closer to the bottom level than we are the upper level. Not by a whole lot, but we are closer to the lower one than we are the upper one. If we look at pivot points, the purple line is 5213. That's where the floor pivot is. S1 is at 5200. That's a put wall. It would make sense that we hit a put wall and then rally. That would be where liquidity is at. It's where they'll monetize the puts. It lines up reasonably close with yesterday's low. All of yesterday's low, not just the RTH. And it makes sense that we don't bounce on yesterday's low, right? That we cut through it because liquidity resides on the other side of the pivot. I'm just going to keep telling you that until you start to believe it. So we break yesterday's low, expand through it, get a measured move like a 111, tangle us right up into the put wall and S1 level, bounce there, take out R1, get into R2. Through the R2, we get into our own ADR level, maybe into an R3 by the end of the day. That's my base case scenario today. So that's the plan. The thing is, you want to plan for, what if I'm wrong? What if I just get it completely wrong and the data goes against me? The market does the opposite of what my plan is. Great. That's an alternate thesis. You can plan that out too. That way, if your first plan doesn't work, rather than just sitting there moping about it, complaining about how difficult it is to trade, just take the other side. You'll already have a plan. If we don't bounce on S1 and break through, then we'll target the other S levels, S2, S3. S3 lines up with the lower ADR. ADR is just a fancy way of saying what we've done over the past month. It's the average daily range. So going down to 5175, that's nothing. We could make that move on a day-to-day basis. We have been making those kind of moves on a day-to-day basis over the last month. So it's not some big mythical level that is outside of our reach. We could hit either one of these levels. In fact, we can hit both of those levels today. It's not out of the realm of possibilities. We have a 71-point ADR level. So the distance between these two red lines is 71 points. Thing is, from where we opened last night in Globex, we could move 71 points in one direction. That would be 52.82. And again, we can make that in a day, no problem. I'm not reaching even a little bit. We could also move 72 points in the other direction from where we opened, all the way down to 51.40. Again, that's nothing. So really consider those levels for the day because they're on the table. Easily reached levels without expanding even a little bit. It wouldn't be one of those days where they're like, oh, wow, we just made headlines for another really big move. Nah, that'd just be another day at the office. Since the data is going to be coming in at 1 o'clock, the data that we're really looking for, it's possible that we start to that we get some big moves before that, just because when we have a low volume environment, markets can make big moves. I know, I get it. New traders always struggle with that idea. They think volume moves markets. And you're not wrong. Just when we have a really low volume, when the dome is really thin, an order that isn't as big as what it would normally need can move the markets because the dome is thin. There's not a lot of participants. That's why the NASDAQ is so jittery and jumps all over the place because it's so thin. And even an order of 10 contracts can move the NASDAQ 2 points. We do have that volatility trigger at 51.92. That's a cog line, by the way, center of gravity. So it's another level that we want to consider if we make moves to the downside. In fact, all of the options levels other than the call wall are all below us. So any moves to the downside is going to struggle. And from the weekly standpoint, that pure price analysis, we have set the low. We have not yet set a lower high because we're still on the move up. And until this falls away, then this is not yet a pivot. And it does not yet count as a lower high. We may not get a lower high, but if we do, it's very likely to look something like this, where we ran up off the bottom, kind of stalled out, failed to get back to at least an equal high or a new high, and instead fell down, broke the previous low, and continued lower. Well, the previous low is a long ways off, and it's a round number. We're above the 10-week. We're struggling with this really big bar. That's the bar of control. And if we can get through that level, then we're likely to keep it. Got the round number 5,200. We're already above that, or at least we're fighting with it. Looks like we're coming back down a bit. But this is where all of the liquidity is that we're struggling with from this really big bar. And then measuring the whole thing, we can mark out the half back. That's 51.88, if I remember from every time we kept measuring it. And we're above that, so we need to keep it. It's one more level that is underneath us, right? So 51.48 for the whole thing, and 50.88 for that half back. Ten-day, 30-minute volume profile. We would have more of a classic B if it wasn't for this tail up here at the top. It's a lot of structure up there. We don't yet have an answer on whether or not it's building out a base or a topping pattern. But you can see if we break this low, how we've got all this shallow area here, we could fall back down really fast, just like we moved up through that zone really fast. There could be a little bit of help around that 51.90, just a little bit, but I doubt it would be enough. More like it would just slow it down, like a little bit of a speed bump. We're going to continue to lose volume today through this lower section, but it's not where the point of control is. So that's not going to help shift that point of control. The only thing that would do that is if we stay in this zone long enough to build out volume and bring it up. And I don't think we're going to stay paused for that much longer. We've been holding for the 10. We're getting the 10 today. Threw these levels out yesterday in the pre-market, right? It was still this time yesterday when I drew them out. And just mentioning these, as you can see how liquidity on the other side of these pivots. Now, of course, we do the same thing in the RTH, right? Mark that 5-minute candle. It's a 5-minute open range. Do the exact same thing. We don't have a VPOC level to lay out from yesterday. We've already cut through that zone multiple times. We're showing a classic P this morning. If we continue to build out this base along the bottom, that's going to change and we'll have a classic B. But we don't yet. There's a profile that they talk about when it comes to the classic P, now that I've zoomed out a little bit. And it would be the idea that think about how this would look by the end of the day, where we've got this really long profile and this high area with a point of control somewhere up here. And, you know, we had a long move to the downside without a lot of volume in it. See where we're at here. Something like this, but in the other direction. Yeah. So that's one side. That's one idea for the move to the downside, that we could see something like that. But if the argument remains that we're going to get like an S1 bounce and a rally into R2, R3, then we're likely looking at a profile probability that looks more like what we actually have here without me flipping it over. Big base on the profile on the lower end with the point of control on the lower end, and then price making a move up, which gave us this really thin level here. Then we would end up with a classic of B with a point of control somewhere along the midpoint of that. There is a VPOC at 5,300, but to be fair, I'm pretty sure that level goes back to a contract that we're no longer in, right? And if it's an old, outdated contract, then it wouldn't count. It's not. I thought it was. That's good. That means it still counts. Good, good. All right, the weekly expected move held so far. Still need our data from today. Looking at it on the daily, although the weekly doesn't yet have that confirmed pullback, we do have a confirmed pullback on the daily. So the lower high that was set here has been taken out. No matter what, we've got a higher high. And the low that's been set here has already been taken out with this higher low. So we've got a higher high and a higher low. We need 2 higher highs and 2 higher lows for a full set. And a full set is what you need for a trend. So we're not trending here, but that makes sense. It's hard to, consider a good trend when we're still sitting inside of this range anyways. And it's not yet anything more than just a complex topping pattern, even on the daily. But we are above the 50, we're above the 20, we're above this last structure of 5150, and 5200 is now the level that we have to contend with. Wouldn't really be much of a surprise if we pull back here, back into that 5150 area, retest this like a Busby, and then, make another leg up afterwards into, say, 5300, something like that. One level at a time, right? Just working our way back up. It's possible. Yeah, the 3-day could come into play. I'm just about fed up with the 3-day when it comes to, or even the door when it comes to the futures. Because I've looked on there and played them out. I went back over the last few years and looked for examples and opportunities on them. And compared to equities, the day 1 open range and the 3-day open range on the futures, at least on the ES, can't say the same for maybe gold or, crude or something, but on the ES, the opportunities are just really not all that exciting to me. I still like it, just not on the indexes. All right, we can easily see the climb back out. We're holding 1% above the 10-week. It wouldn't be a surprise if we pull back and retest it again. We've got a lot of examples of that, right? Where we get back above the 10 and we come right back under again here too. So, don't be surprised if the move back down takes us completely underneath the 10. It's really going to depend on that data today. And I'm not even going to begin to try to guess which way it's going to go. I just want to have a plan for whichever direction it decides to go. I think that's the better approach. And we have CPI next week, right? I mean, it's a long ways off. I can't see the market sitting sideways all the way to CPI. That line in the sand, that 1.5%, continues to hold. Granted, we did set a new high. This gauge, measuring how far from 10 we've been. So far this year, this was the highest we've gotten from the 10. And then we pulled back from it too, just like we expected. Holding the range, staying sideways, correcting through time rather than price, because we really haven't dumped. We didn't drop back down to the 10 or anything like that. We're just pulling back. And we're still 0.92% above the 10-day. Right on schedule. It's bearish that they rolled the put wall. It's bearish that they did not roll the call wall. We really don't have a lot of levels left overhead other than that call wall. And now the daily pivot point, that thing's over our head now. But everything else is really underneath us. there's more resistance for a move down than there is for a move up. We need the data for sure. The data doesn't care about levels and put walls or any of that. It's going to move and blow through any level that gets in its way when we get that data out. But other than that, we've got a plan at least for what we're going to do if it breaks and which direction we want to see it go. You can see already that we're cutting through that S1. If we're not going to bounce there, then S2 becomes the next level in focus. But we can measure all of yesterday and see that we cut through the 111. So if this was just a bear trap, then it would have bounced there. 1, 2, 3, 6 is now the line in the sand. If it doesn't pause there and begin to base, then we play the short side and we target the ADR levels. See what we got here. Maybe that ECB speaker is throwing shade or something, chipping teeth, and made the market move. Seen a comment from China, US chip limit for Yahweh is economic coercion, but I doubt that's going to be the mover. There's also Brazilian retail sales. Doubt that. All right, China ADRs are down almost 2%. Bitcoin down 1%. Cloud computing behind that. The Magnificent Seven, and then semiconductors, more emerging markets with China, real estate, consumer discretionary. Pretty much across the board. It would almost be easier to look at what's up. What's that? Nat gas. You don't want a market that's rallying off of nat gas. Pot stocks are also up, but if we look at that, it's not up by much, right? It's more of like a bear pennant than anything else. But as wild as these swings are, we are on the lower end of this swing. And utilities are working on being up. They're not up enough. You can see from utilities, we're a bit extended here. Wouldn't be surprised if that round number $70 kind of gives it a little bit of a whack back. This is gapped up this morning. I would be looking for an exhaustion gap soon. It's also right into resistance. So nat gas and utilities with pot stocks, that's not much for a rally. All right, we got US dollar Japan expanding that move to the upside, broke previous pivot. So they're above 155.5. The dollar is holding underneath its own Globex high, but it just opens up at 820. We'll get a little more information in about 2 minutes on what's going on with the dollar. A 10-year inside day breakout from an RTH perspective, but not yet inside day breakout from its own Globex yet. We got that first red candle. And like I said, it's going to also open here in a moment. If we start to see this 10-year sell-off and the dollar sell-off, we would want to see reciprocation in the ES and the NASDAQ. Want to see these start to turn around and go up. Now, these aren't going to move this, right? The 10-year and the Dixie, they're not levers that are going to push the ES and the NASDAQ higher. But if they start to fade, it takes weight off of the S&P and the NASDAQ and gives them the room to move higher. I always like that analogy of a runner running up a hill. If we add more weight to that runner's back, it just slows him down and makes it more difficult for him to run up that hill. Doesn't mean that he couldn't, just that it'd be very difficult. Take that same analogy. If we removed weight from that runner's back, makes it easier for him to run the hill. So the 10-year going down and the dollar going down, that would be taking weight off of that runner's shoulders so that he could run up the hill. It's been a lot of positive news on Apple. Even again, last night there was news on improving China deliveries. Didn't really help that much. Got a little bit of a pop and we just sold right back out of it in the overnight hours. We got a pretty narrow channel. That didn't really seem to move the needle either, where we opened up above and just sold right off into it, maintaining above the weekly pivot for now. And we are back inside the previous week's high. So failing to get that breakout that we're looking for. Actually, we've been inside previous week's high all week. It's the previous week's close. So we're underneath where we closed Friday. After all this movement we've had so far in Apple this week, we've done nothing and we're underneath where we closed. Still bearish, even with the positive news. We're not getting anything out of this. And it was such a big move that we got to digest. All these moving averages tangled up. It's just a bunch of trash. $178.6. It's a long ways off. We don't want to even consider it going all the way to that point. I would focus on the current week's low. If your long Apple needs to hold above our own current low, it's 180.5. So you can see Apple jumped completely over that 200 period moving average after testing it multiple times and getting rejected against it. It's funny. Someone told me long ago when I was new to trading how a market that struggles to get through a level in the daylight will wait for the lights to go out and jump over it in the dark. And I always thought what a funny comment that was. And yet you see it a lot, how a market in the regular hours might reject against a moving average or a pivot point, just really struggle to get through that level. Then in the overnight or in the pre-market, it jumps it. Now, of course, there was earnings involved. There's a lot of reasons this jumped, but it is above that 200 now. The problem is it was a down-sloping 200, and that's not going to work, right? So we expected to pull back into the 200. We could even come below it. If this is going to base and turn around and eventually start working its way back up, it doesn't mean that that we're not going to undercut that 200 once or twice. This was an upsloping 200 back here, and yet we still got underneath it for a while, right? And we continued to test it, got underneath it again, and then finally we cut that 200 and held underneath it, which turned it over and had it down sloping. So if we're going to turn everything around and get this 200 to point back up, it doesn't mean that we can't undercut it once or twice. It's just so broken and damaged. This is not a good, clean, healthy chart, Not like that. I mean, that's beautiful. And Microsoft is messing with its own Globex low. If we break that, I would look to get back inside the previous week's high. And for all of these, Apple, Microsoft, the group, if we start breaking our pivot points, then the weekly is the target. So for Microsoft, that'd be 401. If things are going to get nasty, then that'll be the target. For Google, it's 166.5. Google's got a really nice setup here. Looks like it can hold its own halfback. Just use the RTH. Well, we're already underneath the RTH halfback, so that leaves us with all of it. It's 169.5. Might as well just say the previous week's high. If we break back underneath that with Google, then we can challenge the previous week's close and the weekly pivot point. We need the data. That's what it all comes down to. All right, so there we go. We are closer to the lower one than we are the upper one. It is much more likely at this point that we go to the lower ADR and hit it first. It doesn't mean that we're going to expand beyond that and get into the next ADR level, but at this point, the lower ADR makes a lot more sense. We're already past the S1, so any idea of an S1 bounce into an R2 level, that's off the table. $51.90 is the next level. 51.92 is a cog line. So that kind of lines up really well. Level by level all the way down to this lower ADR at 51.76. Just keep track of how far away from VWAP we are, because this if this expansion gets a little out of control, it'll base and pause and retest that VWAP on its way down. Watch the clock. Be careful. Be safe. I'll see you guys tomorrow.